Today, wages continues backwards in real terms. Hi again, it's Martin North from Digital Finance Analytics, where I've latest post covering finance and travel news with a distinctively Australian flavour. The seasonally adjusted wage price index rose 0.7% in June, that's through the quarter, for the third consecutive quarter, according to data released today by the ABS. The ABS said, after 3 quarters of consistent wage growth, driven mostly by wage rises across the private sector, the annual rate of growth was 2.6%. That's the highest annual rate of wages growth since September 2014. Expanding demand for skilled jobs over the last 12 months has continued to build wage pressure across a broad range of industries and jobs, reflected in the increasing size of pay rises. Private sector wages rose 0.4% over the June quarter, with the public sector rising by 0.6%. Annual private sector wages at 2.7% rose more strongly than public sector wages at 2.4%. The public sector has a large portion of jobs paid under multi-year enterprise agreements, which tend to be less reactive to labour market conditions. In the private sector, a higher proportion of jobs received a wage increase compared to recent June quarters. The average size of private sector hourly wage rises increased to 3.8%, up from 2.7% this time last year. That's the highest rate of average wage movement for the sector since June 2012. And the average pay rise in the June quarter 2022 was mostly driven by a combination of in-demand market-sensitive jobs and enterprise agreements linked to the Consumer Price Index. Award jobs are expected to receive wage rises after the June quarter, as scheduled in the Fair Work Annual Wage Review Decision 2021-22. In regional terms, the rate of quarterly wage growth across the industries ranged from a high of 1.4% for the construction industry to 0.1% for the accommodation and food services industry. Focusing on the market-sensitive jobs in the private sector, a growing proportion of these recorded wage rises, 17% in the June quarter, compared to previous June quarters at 13% and 8% in 21 and 20 respectively, which was of course the start of the pandemic. Looking at the time between pay rises, 74% of jobs received a pay rise in the June quarter 2022, and they recorded at least one rise in the last year. Compared to previous June quarters, a significantly higher proportion of those jobs recorded more than one pay rise in the last 12 months. Annual wage growth also varied by industry, from 3.4% for the construction industry, which recorded its highest annual growth rate since December 2012, to 2.2% for the mining, electricity, gas, water and waste services industries. Across the states, Western Australia recorded the highest rate of quarterly wage growth at 0.8%, while Queensland and Tasmania recorded the highest rate of annual growth at 2.9%. The Northern Territory recorded both the lowest rate of quarterly at 0.3% and annually at 2.0% for the second consecutive quarter. While not affecting the hourly earnings measured in the wage price index, changes recorded in employment levels and work hours within the labour market can influence average earnings. Those changes will be reflected in average weekly earnings, which will be released later. But the bottom line is this: bearing in mind that inflation is running above 6% at the moment, everybody's going backwards in real terms. Wages are still not rising fast enough to cover the growing costs. No wonder mortgage stress is rising, and no wonder more people are feeling under financial pressure. I'm Martin North from Digital Finance Analytics. Many thanks for watching, and I'll see you again next time.